Everyone. So a lot of agency owners ultimately believe that profit is what's left over after their expenses, but that's ultimately the mindset that keeps them just a bit stuck. So if you're only profitable when you're doing the work yourself or when one big client ultimately sticks around, you don't really have a business. You have a job, and even a job that isn't very safe and secure. So in this episode, Darren and I wanted to be breaking down exactly how to go into this kind of profit first thinking. Really makes it how it would work in practicality for an agency. So we'll talk about what makes an agency model profitable and how you do it by design, where most agencies kind of just go off the rails, and why the scaling without having a profitable foundation is a trap that is going to break you and your business. So the format that we want to kind of go into it is thinking about this like initial kind of profit first thinking, and what exactly is that?
I love to have these kind of sessions where we get to just kind of deep dive into the mind of an agency owner, kind of elaborate on these different topics, right? So overall, what is profit first thinking?
So the mindset of the profit first, and I just want to give credit where credit's due. Profit first is a book that was written by Mike Michalowicz. So profit first thinking is where you have profit ultimately is one of the first priorities. So you have a percentage that you've designated specifically to profit, and it's taken out immediately. It is not what's left over. It is not an afterthought. It is actually the first thing that ultimately happens. And so the idea, frankly, is a lot around the idea of Parkinson's law, is that humans will utilize what available resources we have available to us. And so if you remove those available resources, profit to begin with, you are not going to actually end up eating away at your profit by increasing your expenses and ultimately having a profit first mindset.
So how is this different from the way that most agencies currently view money?
I think it's not just for agencies. I think it's generally how most people view money. It's like, here's the bucket of what I have, and let me spend it, and hopefully there's some profitability left over, is really the how it ultimately functions. But the practicality of it is that so often there's no real constraint placed around a business. And like we have these conversations pretty consistently. In fact, we got an email earlier today from a client of, hey, what budget can I spend this money from? Like, I want to go buy this thing. Where can I pull this money from to do so? One, I think it's a good thing that this question is being asked. And fortunately, we had the foresight to know that there was going to be a need for this budget. So we actually had a budget specifically set aside for this need for the client, but actually having constraint around it. So what ends up happening for the most part is that there's no real framework by which anything is done within the business. There's no means by which to make a decision, a buying decision. And so it's incredibly important to recognize that you need to build your business to be designed for it to be profitable in from day one. So making sure that you have a target margin that you're headed for, that you can then reverse engineer from there your pricing model, your delivery model, the way that you go about investing and bringing people on. Are you hiring someone full time? Are you bringing on a contractor? Like, what exactly is the model that you are following here? And one of the things that becomes this like really massive trap for so many agencies, and I see it happen anywhere between like that $500,000 line to that $1.2 million in revenue line a year, is that up until that $500,000, their model that they currently are operating under kind of works because they are the primary delivery person. They may have contractors that they brought in here and there. They may have even hired someone on full time to do so. But once they get to that stage where they can no longer do all of it, they end up having to hire people, and every single hour of someone working extra, going above and beyond, having scope creep, it ends up actually costing them money. And one of the number one questions I get from an agency in that phase of business is, why am I making less money now? I'm almost twice the size I was, but I'm making less profit now than I was before. And that's because they didn't actually build and reverse engineer their model to make sure that that model worked in the first place.
Interesting. I do hear that a lot as well when people start to hit that point where it's like, okay, cool. I am currently doing 250,000 in revenue, but I'm taking home 96% of it because I'm doing all of the work. But it's like, well, now I'm at 500K in revenue. I expected to be at like $400,000 in revenue, but now I'm at 150. What's going on here? How is this not translating to me
The math isn't
bringing in
mathing.
double? Yeah, the math is not mathing. So it sounds like a lot of this is done in the planning stage. So what are the kind of key elements of having that profitable agency model?
The reality is that we're a service-based business, right? So the most expensive thing that we ultimately have is the cost of labor, whether that labor is you or that labor is someone else that you've hired or is a contractor, what have you. One of the number one things that I'm thinking back to a client in outside of New York City, that when we first were working with them, they were working in a blended rate, which is like a typical number that so many agencies ultimately end up having. But it's like this $140 number that they have as their blended rate across all the different functions within the business. And so then I'm not a fan of the blended rate because I just don't think that it makes sense from a basic business fundamental perspective. But what the blended rate tends to miss is not every hour within a workday is productive time. We then end up missing cost of benefits. We end up missing cost of overhead. We end up missing cost of insurance, rent, et cetera, et cetera, et cetera, et cetera. And so the primary thing that we have to be looking at is what are all the elements within the business that actually are the components that are necessary in order for us to deliver upon the model that we're following. So here's the framework, here's the process, here's the thing that we are going to deliver. And so what are all the different components? It's like the idea of I've got this Apple Pencil here in front of me and I have plastic. I've got the components inside of it. I've got a chip inside of it. I've got the battery inside of it. I've got all these different components, these different elements that need to go into it. And what so many agencies miss is thinking about it from this kind of manufacturing oriented model is you have to think about all the different costs associated, being able to understand, all right, for me to know that I'm going to take this product and I'm going to manufacture it. This is the cost of delivery, but I also have to get it from the manufacturing plant into the hands of the customer. I have to then market in order to get it in the hands of the customer. And then I have all the operational costs that are associated as well. So thinking about it is not just the actual cost of delivery, but overhead, profit, marketing, sales that has to go into it. And so many pieces, layers are often missed in actually building that base model. So one of the things that we do with pretty much every single client at the first kind of stage is go into and uncover their initial pricing model and build a sheet that allows for them to have all of those details, all of those components, all of those elements taken into account so that they know that they can be profitable, or at the very least, if they're going to make a choice to be less profitable on this project, that they do it with all the information.
So how would I know, or how would the agency owner know if their model is working or if their model is broken?
If you are less than 25% profitable and you're not less profitable for a specific investment reason, that you've made a programmatic choice to forego profitability to invest in one specific element or one specific thing or two, then something's broken. Something's wrong.
How do so many agency owners fall in this trap then?
A bit of a mindset oriented piece that they don't believe themselves to be good at math or accounting, so they avoid it and avoid the question. And so do what they know to be best in that moment and look at what other people are charging. And the reality is that when you think about it from a pragmatic standpoint, you have a couple of pieces of what you have is a cost comparison, right? So you look at another agency that you don't know whether there's apples to apples comparison of what it is that they're delivering or their costs within their business and what their model and how exactly it is that they function. So they're looking at another business and saying, all right, they're charging $5,000 for a website. Okay, so I have to do the same kind of deliverables for that same price point. And so they're assuming a whole lot of things, and then very often incorrectly, or they're looking at the model that is, the Dentsu or WPP size agency that have huge scale. So you're looking at these agencies and it's fine to only have a 5 to 8% profitability net profit number when you're $100 billion business. That's fine. It's great. But when you're a $500,000 business and you only have 4% net profit, that's a problem. It's a huge problem. And so the base understanding, the base fundamentals of it, doesn't actually function the same way. So you're either comparing yourself to a business that you don't know the actual economics of it, and so you're not thinking about the math behind it, or you're looking at a much bigger business that the economics are just not the same.
I think one thing that you kind of touched on a lot here is the fact that agency owners also get tricked into thinking that they're more profitable because they're doing a lot more of the work and they're doing a lot of the servicing. Are there any other kind of hidden costs, or what is one of the hidden costs of them, kind of being the one driving all of the profit?
The reality is that if I'm a creative director, as an example, right, and I'm functioning as a creative director, I'm functioning as an account manager, I'm functioning as a strategist, I'm functioning as a junior designer, and I'm functioning as a project manager within the project. And so if I were to take all of those different components and sure, I may be being paid enough to be a project manager, maybe even an account manager, but I'm not actually being paid enough to be a CEO. I'm not being paid enough to be a creative director. I'm not being paid enough to be the salesperson in order to actually have and replace myself in this function. So the moment that I actually have to replace myself in that function, it makes it unsustainable. So it becomes a problem because the base actual costs, and frankly, when I talk to the vast majority of them at those moments, is that the moment that they have to replace any component of themselves, it becomes a bit of a pricing model challenge.
So are they not charging enough for their services? Are they charging just enough to get by themselves? Like what is going to help them get out of that place where they're just doing all of the work, doing 5 different roles and only being paid for one, and that one is the lowest rung on the pay scale?
Generally, a couple of things. I mean, pricing is definitely charging more will make an easy fix, but the reality is that often that may not actually be as easy of an action as you may like, right? I mean, if you're working with a barbershop versus working with Coca-Cola, the pricing component of what they have as available resources are clearly different. So the reality is that it's usually multifaceted. Pricing is definitely a consideration and is one lever that we can pull. The other is deliverables, is offering less deliverables for the same amount of money so that you're constraining what you actually have within the tiering or the scope of work that you also have within that specific client. But then also you have the reality of so many agency owners being quite people pleasers. And so when a client asks for, well, let me just have it just, one other version of it, or, let me take this graphical element and turn it from it being in this format with these dimensions. And let's just do another one from an Instagram size and to Facebook, which isn't largely the same now. But anyways, and I'm just going to change the dimensions of one platform to another and just like give you, it's simple, right? It's easy. And it's like, all right, well, yeah, theoretically it is, but you do that over and over and over and over again. And now you're creating an entirely different dynamic and you have this like a massive amount of scope creep. So first is pricing is definitely an easy lever to pull, assuming that it's possible with the current clientele that you're working with. Two, it's over delivery. And one of the components of it, it's like, yeah, sure, all of those things could help that client, but is that really what they need right now? In order for them to achieve their initial phase of growth? It's like, sure, a small business could use media management. They could use social media. They could use copywriting. They could use branding. They could use a website. They could use, direct mail. They could use whatever, but they don't need all 15 of them today. So what a lot of agencies end up doing is like, I've got a $2,500 budget that this small business can afford, but let me fit all 15 things into them. It's like, no, fit one. Do one and do it really well and fit it into what they currently have. And then once they've achieved the next level of growth, then do that next layer.
So it sounds a bit multifaceted in terms of the different levers that you can pull. So, I mean, what happens when an agency tries to scale before fixing their profitability?
Often they end up in a lot of debt that they end up coming to a mentor, to an accountant to try to uncover, or they end up shutting their doors. Very often it happens in that they close one large client. Their pricing model doesn't really work. They're very nominally profitable. And then that client goes away. And so they end up in a place where they're trying to maintain the level of team that they had before. They lost that big client and they accumulate a lot of debt. I've seen that happen at least a dozen times, and hundreds of thousands of dollars of debt, refinancing homes, emptying out retirement accounts to try to just maintain the business. And that's often the result.
So if I'm somebody who is trying to scale and I do pick up a large client and I'm like, okay, I need to kind of move and scale with this larger client that I have now bought on my books so that I have more revenue. Like what are some warning signs that I can see or that will tell me like, hey, maybe scaling this quickly is hurting my business or something along those lines, that it's like a warning signal, a canary in the coal mine, if you say.
There's two pragmatic points that I would say. I mean, generally I look at financial statements from a benchmarking perspective, but I'm going to start to dive a little bit maybe too much into financial analysis. That is not the intention of the call, but I would say that there's two primary benchmarks that I would want an agency to look at to know whether they're in a problem area. And then we can talk about the question of the larger client. First is if you're below a 50% gross profitability, that means the total cost of your team members, contractors, cost of creative software, et cetera. If you have $100,000 worth of revenue and you're spending more than $50,000 to deliver on it, and that's including your own time, then there's a problem in your pricing. There's a problem. And then if you're under $1 million, you're typically going to be between a 25 to 30% operational cost. If you're over $1 million, you need to start to be able to be under 30, starting to be able to be more efficient and have some economies of scale. Now, regarding the anchor client piece that you mentioned, am I going to suggest to you that because you have, a multi-million-dollar contract that comes to you, or should you turn it away because that would make that client over 70% of your revenue? No, I'm not saying that. But I would be very pragmatic of what happens if that client goes away. What actions do I need to take? Making the pre-choices, because the reality of we're humans running a business here, right? And we end up building loyalty, relationships with our team members, and it becomes very difficult to make a choice that you don't want to make when that ends up happening. And so you end up holding on to people that you can't and shouldn't, and it ends up becoming an issue for the business and for you. So you have to make a pre-choice of what that means from a benchmarking perspective, what decision you should be making when, and make that choice. And so know that you have that team that's associated with those specific accounts. And if they go away, then the team has to go away, and know that it is a business.
So I have a follow-up question for you on these 2 points, right? So you say around a 55% gross profitability is kind of like the market which people should be hitting. So how long do you run that deficit of we're at 50%, we're at 45%, where you're understanding like, okay, my cost of services or my cost of team is a little bit too high before you make the decision to maybe pivot into, bringing in more contractors for, special projects, or ultimately making those decisions to separate from team members? And how do you strategically do that when you do, like, people are human, you kind of have that connection with them, that bond, and maybe you think of it as an investment for, like, hey, I know we're going to pick up some more business down the line, or I really just don't want to let this person go. How do you make those kind of standpoints or milestones for that?
I mean, I think there's such an incredible amount of nuance to that question that it's very difficult to just give a one-pointed advice. So I'm not going to give advice to that question. But what I will say are some of the factors that you want to consider is the amount of training time that it would take to replace that person. So how much can you actually afford to maintain that cost level? So how much reserves do you actually have within the business? How long is it sustainable for? When is it actually going to become a problem? And maintaining that level of team, when does it start to risk the entirety of the business? And so those are the types of considerations that you want to be making. And I can't directly say, hey, you should let go of this person after 3 months, because the reality is that it's not quite that cut and dry, because there's so many other cost factors and considerations that need to go into place there. It's what is the size of your pipeline? Potentially you have some opportunity there that you need to be considering. So there's a lot of factors that you want to think about in that example.
I think that kind of answers all of the questions that I had surrounding this. But ultimately, just to kind of summarize it, starting with the end in mind and reverse engineering from there. So having an actual plan in place that will allow for you to extrapolate on the kind of the things you need for your agency to continue to grow, not you just building out a job essentially.
Yeah, 100%. And I would say, the profit first thinking mindset isn't just about money. While it is a business, there should be some financial reward for it. It's about building a business that's sustainable and doesn't depend on you for every single piece of what's happening within the business. Your agency shouldn't make money whether you're the only person and you having to be in the weeds. When you build the right model, track the right numbers, and price with intention by design, profit becomes a habit. It doesn't become a surprise that you just are rewarded with randomly at the end. Hey everyone, thank you so much for listening in today. With all of the shifts in the industry, it is easy to feel overwhelmed or unsure of your next move. So I'm not here to try to sell you anything. I just want to give back and guide you through the uncertainty. Whether you're navigating new trends or just need some clarity, we're here to listen and offer advice. Head to creativeagencysuccess.com/chat to book a free 15-minute chat with an agency mentor who can provide you with a fresh perspective. Let's figure out the best steps for your agency's growth together.